We are officially into 2026, and while 2025 had no shortage of dramatic headlines, 2026 is off and running. And now investors have the job of balancing headlines with materiality, like sifting through Venezuela, shifting geopolitics, markets at all-time highs, AI and robots to lingering inflation. There's a lot going on out there. So here to help us with some of these big questions and to tell us what he thinks matters is David Sykes, Chief Investment Officer at TD Asset Management. It is lovely to see you.
Hi, Kim. Happy New Year.
Happy New Year to you, too. Before we get into 2026, I feel like 2025 said, here, hold my, or 2026 said, here, hold my beer, and then, and then started. Tell me what you think about 2025. Like, what is the foundation we are moving on from?
Yeah, so looking back last year in 2025, if you look across asset classes, I would say a very strong year across the board. So starting in fixed income, aggregate Canadian bonds up 2-3%, investment grade Canadian bonds up 5-6%, high yield in the US up 7 or 8. So a decent year for fixed income. Switching to the equity markets, a very, very strong year. You look at Canada, the TSX Composite was up over 30%. S&P 500 up something like 16-17%. NASDAQ up 20%. Switching to Europe, Europe was up 20%. Japan was up meaningfully. Korea had a heck of a year. So very, very strong equity returns. And then into private markets, commercial mortgages, private debt, mid-single returns. If you look at things like global real estate, nice uptick. Even in Canada, really starting to see a turn in real estate. Very interesting with the return to office momentum in government and big business. That's starting to come back. And I think the one big one that wasn't really a surprise that just continues to produce double-digit returns is infrastructure. Just a very, very strong theme. But I think the foundation of this really is a U.S. administration that is focused on pro-business, focused on growth, focused on infrastructure. And I think that's caused, Europe through Germany, Canada through our big budget to really start to adopt a pro-business growth mindset. And I think that's really the foundation for what 2026 will bring.
It's a remarkable set of results when you actually think about it. And I think, to you and your team's credit, I don't think anybody last year was saying we're not expecting the markets to do well. But I think the headlines have people thinking, quite the opposite. You worry about tariffs and all the things that are happening. So I guess the same exercise needs to apply today. We start the year off with the extraction of Nicolas Maduro from Caracas, brought into Washington, and then all the implications of what that might mean. So, again, putting on the same lens, how do you sift through that to understand what you think is going to be important in 2026?
So from our perspective, I think there's, at a very high macro level, there's two big implications. I think the first is thinking about geopolitical risk. As we sat there going through the holiday, I don't think anyone would have predicted that this would have occurred, that the leadership in Venezuela would be extracted, as you say. And so I think that just increases the uncertainty, the unpredictability around that administration. And I think what you've seen in recent days in markets is that's put a bid under gold, under silver. That safe haven precious metals play, I think, becomes alive and well. And another way to say that is that there's an equity risk premium now built in for those geopolitical events. And I think the other big move here is on the energy side. I'm not sure if a lot of viewers know, but Venezuela has the #1 proven reserves in the world. They have 18% roughly of the world's proven reserves.
And some of the lowest production.
And some of the lowest production. And let's just call that mismanagement over the last decade or two. And so I think from a short-term perspective, you need to put in a lot of capital expenditure to extract those barrels of oil. And that's going to take money. It's going to take a lot of capital. I mean, billions and billions of dollars in 1, 2, 3 years before I think you actually see an uptick in production. So in the short term, I don't think you've seen a lot out of energy markets. But in the longer term, it's a very interesting play because now heavy crude, which is what Venezuela produces, very similar to Canadian crude, there's the potential in 2, 3, 4, 5 years for that production to ramp up in a meaningful way. And it's now controlled effectively by the United States.
And we'll have to see. We did see some of the Canadian oil producers sell off on some of this news in terms of a quick reaction. And again, that's if everything goes right for Venezuela and the money gets invested. And
yeah, and to your point, you've gone into the country, but now you need to run it, and we'll see what happens. But there's a lot of ifs before that oil comes out of the ground. And I do think it was a knee-jerk reaction for the Western Canadian producers and some of the pipelines. But in theory, that Venezuelan heavy crude does get refined in the Gulf, around Texas and Louisiana. And from a competitive standpoint, that could put pressure on Canadian crude. But I think we need to remember, too, The vast majority of Canadian crude goes to the Midwest, in and around Chicago. That's about 70%. 10-15% of Canadian export crude goes to that Louisiana, Texas refining area. So yes, I think at the margin there could be an impact, but I think what we saw was a bit too much of a knee-jerk reaction.
Let me ask, I mean, this is the first, I'll say, big headline of 2026, and I don't see the future, but I can almost guarantee there'll be a lot more headlines coming in lots of different ways. When you think about the fiscal plans for Canada and the US and the monetary plans from the central banks, is there anything that you think that maybe could change those plans based on, again, we're a week in?
Yeah, look, you've said it. I mean, this is a very unpredictable world. It always has been, it always will be. If I think about US fiscal and monetary, the Fed, I think, has one or two more cuts to go in 2026. We'll see. It's going to depend on labor market and inflation. But I think on the monetary side, that looks to be baked in. And on the fiscal side of the United States, I think people forget the so-called one big beautiful bill is going to have a fiscal impact. There's going to be tax reductions, some bigger refunds to consumers. So, that's looking to be, a 2.5% growth for the U.S. in 2026. I don't think the Venezuelan events are going to impact that in a material way. On the Canadian side, a lot of fiscal power. If we think about the budget that the Carney government tabled, we're talking huge sums of money into infrastructure, productivity, into housing, and into defense. Something like $260 billion between now and 2029. On a $3 trillion economy, that's a big, meaningful stimulus. And on the monetary side, Bank of Canada, I think, has done its work. We're now at 2.25% overnight. 5 and 10-year interest rates in Canada are effectively flat from last year. We haven't moved a lot. So I don't think this will have a material impact on the monetary and fiscal plans in 2026. But as you say, we'll see what the year brings.
Let's bring up, you've given us a chart where you're taking a look at annual earnings growth out of the S&P 500. And what's interesting about this is this is double-digit growth, for the next 2 years and after a strong year as we saw in 2025.
Yeah, and I think the one thing at the end of the day, we always have to remember as investors, if earnings grow, stocks grow. And so this is something that's very important to us and something we track very, very closely. 2025, a very good year for earnings. And consensus would project something like 13-14% earnings growth in 26 and 27 in the United States. And Kim, it looks very, very similar from a Canadian context as well.
We were talking about your earnings outlook for the upcoming couple years. One of the things that drove it partially in the last year, actually maybe it drove valuations but not earnings, but is AI. So where are you on AI right now? Because it was the story, I think, for the markets.
Yeah, look, I think absolutely correct that AI drove a lot of the earnings story. Yeah. A lot of the so-called hyperscalers have spent a lot of money, billions and billions and billions on CapEx. But I think the fundamental rooting for us is that AI is real. This is not a fad. This is not going away. Yes, I think people can make claims correctly that there is some hype and overvaluation in certain parts, but these are real businesses with real business models with real revenues. And to us, the best thing about AI from a capital markets perspective is the productivity enhancement that you will receive from using AI. And I know a lot of people use it in their everyday life in sort of silly ways, but if you think about what a company can do to reduce overhead, reduce costs, and increase productivity, AI is real, it's not going away. And so for us, we tend to push back a little bit when people talk about this AI bubble. We look at the earnings, we look at the cash flows, they're real. This is not 99-2000 in the sense that we have speculative IPOs, there's all kinds of debt backing this. These are backed by the cash flows of the companies themselves, and you're going to see a bigger and bigger investment in AI in 2026, in 2027, in 2028. It is not going away, it is real, and from our perspective, it's really going to help drive the bottom line for a lot of large corporates that use AI.
Let me ask you, when you think about you mentioned double-digit earnings growth as well, but when you think about it by sector, what sectors are interesting to you in the upcoming year?
Yeah, I think technology clearly is an interesting one. You're still going to see pretty significant growth. Technology grew earnings last year something like 19%. We project earnings growth in the technology sector this year of 16%, so still very good. I think also financials are going to play a big position here. I talked a little bit about the monetary and fiscal stimulus in the United States. On top of that, you're going to see pretty significant deregulation in the financial services industry from Washington. That's going to open up a lot of ability for mergers and acquisitions. I think the financial sector is going to do incredibly well this year. And then if I look a little bit further on the AI trade, it's the industrials. It's sort of the picks and shovels of those data centers and all of the CapEx that needs to get played out. So it would really be technology, financials, and industrials are the places we would focus.
How do you manage the hype, though? Because I know you said AI is not a, you don't believe that it's a bubble. There's lots of productivity coming, but, every time I open my news feed, I see that, Samsung's investing in these robots, and even companies in Canada like Brookfield have investments that are helping with robots. So not talking specific names, but robots sound very sci-fi fantasy. Yep. How do you know what's real?
Well, I think what you know is real is if you look at the business model and you look at the facts. So there is a lot of hype. Let's face it, and some of the stuff is really cool, and it's going to change consumers' everyday lives. It's going to change businesses. But at the end of the day, we're investing on behalf of our clients, and we want to make sure that it isn't hype. These are revenues. These are real revenues. These are recurring revenues. They lead to things like real earnings and real cash flow. And we can analyze and see that growth and see that they have a moat around them and they're protected. And we can see that the business isn't hyped through a lot of debt, and it can make it through the tough times and the good times. And so to me, the way you get around the hype is the deep, bottom-up, fundamental analysis that the entire team does day in and day out to understand, is this business steady, consistent quality, and will it be around for the long run? And most importantly, are we paying the right price for it in the market, and it's not overhyped from a valuation standpoint?
Well, speaking of paying the right price, let's take a look at the Wealth Asset Allocation Committee, as we sometimes call WAC. That's a funny name, David. But anyway, if we can bring up the chart, this is what you are currently looking at right now in terms of where we are. And you take a look at equities, fixed income, and alts. So maybe just take us through it.
Yeah, at the highest level of asset allocation, I think it's very important to understand that we're overweight equities. I don't think that the team is calling for another 20% plus year, but we do see very significant earnings growth. And so we like the United States, we like Canada, a lot of good things happening in both areas. On the fixed income side, we're modestly underweight. I think what you can expect there are yield-like returns. Currently in fixed income, yields are around the 3.5% to 4.5% range. And then we're also now overweight in our privates or alternatives business. And I think this is where we have a very large conviction around a couple of franchises. One, we talked about Venezuela, we talked about the uncertainty. There's a certain bid under commodities that we quite like at the moment. I think commodities will do well in 26. Infrastructure is a theme that we have consistently talked about year after year after year, and we've seen double-digit returns in that franchise. And so infrastructure for us is another big one. And real estate, as I mentioned, you're starting to see those green shoots in Canada, and it's starting to really warm up. So we would be modestly overweight equities, underweight fixed income on a modest basis, and we'd have an overweight in our alternatives or our private markets.
I still have a couple minutes. I wouldn't mind just digging into the infrastructure and commodities side. When you look out on commodities, I've spoken to some people too, saying you're starting to see a bid under commodities, partially maybe because of the geopolitics, because now it's about scarcity, who has them, do you have access to them? So it's changing the market a bit. Do you expect that to move in the next little while?
Yeah, and look, this is the unpredictable nature now of what we've seen at the beginning of the year. And I think if you think about the pieces on the chessboard and how they move, what will happen in Asia? What will China do? There's been some tensions between Japan and China. China controls a lot of rare earth minerals. How does that impact? And so I think this all just gives uncertainty, which now means if you can get safe, consistent, steady supply, that's really going to portend well for that commodity in your jurisdiction. And so I think that's another reason why they do well.
And on the infrastructure front, what are some of the kinds of things? Because I think alts sometimes for people often is quite mysterious. Right. They think, and these are just things that do not trade publicly. Yep. But what are the kinds of things that you think about with infrastructure? So
there are a number of different things to think about infrastructure, but I think the simplest and easiest is to say power, power, and power. AI requires a lot of power. It's going to require power generation, it's going to require power transmission and power storage. And so if we think about wind farms, if we think about solar, if we think about transmission lines, if we think about storage and storage batteries as a offset for bad times when a grid might go down, those infrastructure plays are real, and they're not just needed in Canada, they're needed in every country around the world. And this AI theme that we are fully believers in requires a lot of power. When I say a lot, I mean a lot. Yeah. And so that infrastructure build out, it's not just replacing the old infrastructure that's dated, but it's the new infrastructure that we need for a modern age. And that's really a theme that we believe in and have a lot of conviction behind.